Welcome to today's webinar, courtesy of the Kentucky Small Business Development Center right here in Louisville. We're all about hooking you up with free, super secret business coaching and training services. It doesn't matter if you're just dipping your toes in or gearing up for a big expansion. We've got the goods, the tools, and the know-how to help you win. To get the scoop, cruise on over to LouisvilleSmallBusiness.com or hit us up at 502-977-5800. Big thanks for tuning in to today's webinar. Feel free to drop your questions or chat it up with our speaker using the chat feature. Let's dive in.
Hi, welcome everybody. I'm Dave Vetke. I'm the director here at the Louisville Small Business Development Center. Thanks for coming in and joining us on another Thursday today. And as always, I'm joined with my good friend and coworker, Janet Flaw, who runs the show. Hey, Janet.
Hey, Dave. Yeah, it's Thursday. It's not Tuesday. Thursday.
I didn't say Tuesday this time.
And it's 3 o'clock.
And it's 3 o'clock. Yeah.
That's great.
Yeah, so we have an extra session this week. So thanks for joining us twice. Hopefully you did. And as always, just to make sure everything's working, if you look at the bottom of your screen, you should see a toolbar. And if not, just hover over the bottom with your cursor. It should pop up. And there you'll see the chat feature. Just click on the little chat button. And if you wouldn't mind, just because I like doing this, put your name in there and say hello and tell us where you're joining from so we can see where where's everybody at today. So there's Samantha in Louisville. Thanks for joining again. It's good to see you. And there's Janet. She lives in Sellersburg. She's up there at her home office. Carrie from Richmond. Excellent. Hi, Carolina from Louisville. There's Kiona. Where's she from? Hi, Natalie. Thanks for joining. Darlene in Frankfurt. Lots going on in Frankfurt these days. Hey, Herb. Where are you joining from, Herb? There's Kiona from Cleveland. Marsha from Jeffersonville. Cleveland, you're the winner today as far as our distance. And there's Kirsty from Louisville. Yeah, this is always fun for me. Yeah, we got folks from quite a few places. So, hey, thanks for joining again. We're kind of on a theme this week. So on Tuesday, I stepped in and talked about the financial statements and some, how to calculate and break even. And to add on top of that, today we've invited our great friend Sheri Radler, who is an expert in financial analysis and taxes and bookkeeping, all that great, fun, exciting stuff that everybody loves. And so we thought we would just add on here, and she's going to talk to us quite a bit about how to use these things to really understand the health of your business and using them to make decisions and understanding, because numbers are the language of your business, and it's so important to understand what these things are telling you. And if you don't get this information, this is where you make big mistakes. You don't know what's going on in your business. So Sheri, how are you today? Thanks for joining us.
Well, thanks for having me. Really appreciate the invitation and joining you, because I agree. The numbers actually do tell us something. And even our own clients so often kind of say, but I don't read them. And it's
Right.
like, oh, we must read the financial statements.
Yeah. So as we go through today and hear from Sheri, if you have any questions or comments, put them in the chat, and we will ask Sheri. And this is a great opportunity. Sheri's a great expert. So if you have any questions about your business or what your numbers are saying or need some tips, don't hesitate to ask. Put it in the chat there, and we will certainly hit up Sheri and ask her those questions. So Sheri, why don't you go ahead and share your screen? Let's just jump right in and get going here.
Okay. Well, thanks. Thanks everyone for showing up. Confirm you see, but I think you do.
Yep.
Okay, well, welcome. We are going to dive into this presentation of understanding your financial health and deciphering the numbers. I'm Sheri from our accounting, and it's going to be my pleasure to actually walk through this process with you, because whether you're a seasoned entrepreneur or really just starting out, having a clear understanding of what your financial statements say is just crucial for making those informed decisions that will help you drive the growth and help your business sustain, survive, and have stability. These numbers are too often referred to as just something for the tax return, but they're really pages filled with figures. They tell a story of your business's past, present, and future. So today we're going to hopefully not only understand what the numbers mean, but how you can use them and analyze them for decision making. And apparently I must click a button. One moment. The arrow doesn't work. So before we dive into the entire presentation, let's take a brief look at the roadmap of what we're going to cover. We're going to start with an introduction to set the stage, to just make sure we all have the foundational understanding of what we're here and what the financials are. Next, we're going to move over to understanding the financial statements. We're going to uncover why they're more than just a statutory item for your tax group, why we consider them a bedrock of the sound financial understanding that you really need for your strategic business planning. Following that, we're going to dive into the financials. What are they telling you? How do we translate them into numbers and ratios and use them for information? And then finally, we're going to wrap up with applying the knowledge and put together some insights and strategies of how you can turn them into actions within your organizations. We'll wrap up with some tips and takeaways, and to try to help you walk out of here with something that you feel you can immediately implement and try out in your own business. Each section is designed to build on each other, so hopefully by the end you'll have a pretty solid toolkit of how to review these financials and get something out of them for you. So as mentioned, I'm Sheri Radler, and I am with our accounting group, and we're a firm where numbers actually meet strategy and results drive our purpose. Our philosophy for us is what we consider simple. We're focused on the numbers, but we're driven by the results. We partner with our clients not just to report on what has happened in the past, but to understand how the actions and the decisions we're making in real life and in our operations are translating to these numbers and information, and then how we can use this to reverse engineer back to our floor and how we need to make decisions moving forward. Everything is geared toward developing a tangible outcome for our clients, because we really understand that for so many business owners, these statements are considered a means to the end. It's necessary for taxes, but they don't use them. So our mission is really to try to change that perception. So today we're going to try to empower you with some financial insights that extend beyond the basics and see where we can get you from there. So financial statements are actually indispensable for stakeholders. They're the financial compass. They guide your strategic direction, but more importantly, they offer a transparent view of what is happening. They're a financial narrative of your business. So the integrity and the promptness of receiving the information is crucial, because they're offering a historical snapshot of your financial health. They emphasize your trends, your operational results. They can be intricate, so expanding your financial literacy is often vital for all professionals across the board, so you can understand what they are telling you and then how you can utilize them. And who uses accounting information? Because that's really one of those, it's almost like trigonometry and calculus in school with the who uses it once you're done. Well, for accounting information, this information is actually used by quite a lot of people. Owners often are creating this, but both internal and external users are using this information for differing views. Its stakeholders are reviewing for assessing your investment potential, evaluating credit worthiness, complying with regulatory standards. Internal users are using them for decision-making, planning, controls, analysis. External users, financial health, how's the change in financial position? How is the company performing? So the stakeholders that use this information are using it from different lenses, different perspectives, but there are a lot of people that are wanting to look at your financial information. And so the integrity and ensuring that those numbers are correct can make a large impact on how other people perceive you when they read those financial statements. A banker, a lender, someone that understands the proper structure of a financial report, as they read yours, if it is not structured in the correct format, they are actually going to make it, they're going to take an opinion of how you run your business from how you present your financials to them. So no matter whether you're working with a professional, you're managing your books yourself, or how it's coming about, having a firm understanding of your financial statements is really important to us. It's your financial landscape, and this is where all your actionable intelligence comes from. So financial statements are composed of three primary reports. You have your income statement, which tells the story of your revenue and your expenses and your day-to-day operations. Your balance sheet is actually a snapshot, a point of time, but it is letting you know your position of your assets, your liabilities, your equity. And finally, your cash flow is showing you how money is moving throughout your organization in comparison to how your operations are running. So to gauge your financial health, well, each of these reports are showing you a side of your business. It is looking at them in conjunction with one another that really provides the comprehensive story about your business's position and performance. So the first financial statement we often refer to is the balance sheet. This is the snapshot that reveals your book value at a particular moment in time. It outlines your resources, how they're financed, and what the company is actually worth once all your obligations are paid. It's structured around a fundamental concept of assets equals liability plus equity. That is an accounting 101 terminology that most of us learned. Your assets are the resources, what your company uses and what can be translated to be utilized to generate revenue, inventory, cash, equipment. Your liabilities are what your company owes to others, loans, unpaid bills, debts. And the owner's equity is that differential, and it represents what would remain if all your assets were liquidated to pay all your liabilities. So the residual value that remained would be that book value belonging to stakeholders. Now, while the balance sheet is a vital component, it only shows a position at time. It does not show the movement of your operations over time. And that is where the income statement comes in. Understanding the balance sheet position and how your equity holds is imperative, because while assets equals your liabilities plus equity, your equity, that net residual value, is really a formulation of your assets minus your liabilities equals what is left as your equity. It's always a good view. The income statement is a much more dynamic financial statement because it is actually reflecting the movement of your business over a period of time, monthly, quarterly, annually. It is referred to often as a profit and loss because it captures all of your revenue and expenses during the period, summarizing down to the bottom line of you either have a profit or a loss. The statement is a key part because it provides insights into your financial trends, effectiveness of business operations, and period over period comparisons. A rolling 12-month or a rolling quarterly 12-month review of your financials is a great way to look back and kind of see how your business is trending over time within the broader real life landscape of the world. The income statement breaks down and shows the cost of goods sold, the gross profit, operating expenses, EBITDA, earnings before interest and taxes, and then, of course, your final numbers. To further understand this, understanding your revenue, which is the money made from your primary business activity, and your cost of services or goods, which are those direct costs to provide those, coming down to your gross margin, gross profit, is a crucial factor to be watching within your business. And while balance sheets and income statements are fundamental, the cash flow shows a different lens of how money moves throughout your business. Because for those using accrual accounting, your profit and loss in your balance sheet are reflecting your revenue expenses, while the cash flow is actually reflecting the movement of liquidity funds through your business. So this is breaking down your operating activities. This is the section that reflects the cash generated from your primary business operations and expenditures. Your investing activities is helping you track the sale and purchase of long-term assets, property, patents, indicates how money is being reinvested back into the business. And financing activities are reflecting the flow of cash associated with borrowing and repayment of debt, issuing equity, paying dividends or distributions out to the organization. It is crucial that all business owners understand that cash flow is different from profit. Cash flow, references the cash moving in and out, while profit indicates revenue versus expenditures. Profitable businesses go bankrupt all the time because they cannot control the flow of cash. So not having the cash available to do what needs to be done next, it doesn't matter how much is in the pipeline. So it is controlling that movement of cash. A healthy business ideally should have a positive cash flow from operations because that suggests the financial stability and potential for growth. Nonetheless, a positive cash flow does not always equate to profitability, so it does underscore the importance of evaluating all three of these financial statements as a comprehensive unit. Cash is king. We've spoken that before, and we truly believe it. So in managing business finances, understanding the status of your receivables and payables cannot be understated. This is where aging reports coming in because this provides you a snapshot detailed look at the flow and the health of your cash. Aging reports actually help you categorize your accounts receivable and payables based on how long an invoice has been outstanding. So they help you very quickly isolate and identify those that are overdue and allow you to time the flow of your cash effectively. When you're reviewing the aging reports, these are typically broken into timeframes of 30-day increments, and it allows you to understand what is falling outside of your collection terms and where you have funds coming up due to be paid out. Now, the strategies for managing these aging reports and these outstandings actually are similar but different. Because on a receivable standpoint, we want to bring in cash as quickly as possible. So we want to invoice as quickly as after the time of service as we can, promptly follow up on overdue accounts, considering offer early payment discounts if we're trying to accelerate the collection of cash into our business. In contrast, we want to hold on to our cash for as long as possible. So we want to try to negotiate our payment terms so that they align with our collection terms. If we have a 60-day collection cycle in our industry, can we negotiate longer terms for payables? Can we take advantage of payments to avoid late fees? We want to make sure, but at the same time, can we get extensions or negotiate more favorable terms? Utilizing discounts is always an evaluation. Is it more favorable to hold on to our cash or to take advantage of discounts and pay those things early? Effectively managing cash and receivables is key to maintaining that healthy cash flow. It is too easy to get caught up in we have a lot of cash today, let's spend money, let's pay our bills in advance. And then further into the month, further into the period, we realize that we may have overspent ourselves into a little bit of a shortfall. And now we're waiting on those next checks to come in to make that next. We don't need to work on that stressful kind of alliance if we focus and maintain our cash flow relationships. So while the financial statements are showing you and tracking you the numbers and the trends and what has happened in your business, it is when you're diving into the financial statement that the business owner can actually utilize them to build some successful metrics. Because while the paper, while the numbers and financials, they're tools, there may not be the highlight of your business activities, but they are important. So they provide the records of the past performance, but they provide the information for financial analysis to do projections of future earnings, to future expenditures, and track projections of where the company will be over time. One of the most powerful tools is ratio analysis. This involves us using the data from balance sheet and income statements to break things down to a ratio. And that really allows a lot of third parties to analyze statements on an apple to apple basis, because the same company that might be at $3 million comparative to 1 to 5, comparative 1 to 10, are going to have very differing numbers on their income statement. But when you break it down to ratios, now those ratios are starting to give you equitable, actionable intelligence to review them. So when we start to unpack the story of our financial stability, we want to turn those key financial numbers into metrics: efficiency, liquidity, and solvency ratios. Efficiency ratios tell us how well we're using our assets to generate income. What is the turnover of our receivables? How long are we holding on to inventory? So this is actually helping us indicate some operational productivity of our organization. Now, liquidity is all about understanding the business's ability to meet our short-term obligations without having to raise external capital. Quick and current ratios give us a clear view of our liquidity and financial flexibility. $2 of cash for every $1 of liabilities, it gives you a 2-to-1 ratio. That's great. If you have $1 of cash for every $3 of liabilities, now that same ratio is giving you cause for concern. Solvency ratios, moving beyond the short-term focus, solvency is looking at our long-term going concern and stability. So the debt to equity looks at long-term sustainability, and we're looking at whether or not the business overall has sufficient assets and resources to cover all the long-term liabilities of the business. And it's through the lenses of these ratios that we can really start to gauge the effectiveness of the business practices to start making some of these informed decisions. What is our current ratio this year compared to last year? What is our days outstanding of inventory or receivables? How long does it take us to collect funds? What is the value of our inventory on the shelf versus a monthly sales? How many months of inventory is going stale on our shelves in our warehouse? These are all analytics to start looking at in your business. Now, the profit and loss, also known as that income statement, is the financial compass of our business, and it's through this lens that we're looking at the profitability of our business. So we're going to focus here on 3 analytical pillars: the trend analysis, the break-even point, and the contribution margin. The trend analysis is really showing us how things are moving over time. Think of a seasonal business. You may have all your sales in the summer in your garden center, and in the winter, it's very quiet. So it's showing the trends of your high and low seasons over the period of time. By analyzing those trends, you can actually pinpoint drivers and spot warning signs and see what's upcoming and making sure you have adequate reserves or forecast future expenditures and performance. Break even, I heard David say earlier that he covered this week. Break even, it's a crucial metric for any business. This is where it tells you how much sales is needed to cover your costs. If you don't know what this figure is, find out, because once you know what you need to make in order to cover your costs, you can start making some informed sales targets and pricing strategies to ensure profitability. And then finally, the contribution margin. This is the selling price per unit minus your variable cost that shows you how much each additional unit sold is bringing into the house pot to cover the fixed cost and ultimately generating a profit. We're looking for strong contribution margins because, of course, that indicates healthy potential for profitability. So armed with the insights from the trend analysis, you can get a clear understanding of what your break even and the contribution margin significance. So you're well equipped again to make strategic business decisions for your company's performance. The management of payables and receivables we touched on earlier. It's a balancing act, and if performed well, it really enhances your company's liquidity and financial robustness. We're going to touch a little bit on the credit policies, cash flow forecasting, vendor tier terms, because all three of these are aspects that brought into your decision making can really help with your payable and receivable management. First of all, are credit policies. Tightening your credit policies can really help reduce the risk of late or non-payment. It's really crucial to understand who your clients are, understanding what your terms are, conducting credit checks, and making sure you're setting clear terms that encourage timely payments. There are metrics out there that really show that the longer an outstanding item goes beyond terms, the less likelihood you as a business owner have of actually collecting those funds. Vendor terms, that's on the payable side. Negotiating your favorable terms with vendor can actually help provide breathing room in your cash cycle. Tracking and knowing who your top vendors are and where your business is spending the money really can help you as a negotiating tool and tactic for these discussions with your vendors. That way you can turn around and negotiate with them for some better terms or maybe some early payment discounts to benefit your bottom line. And of course, cash flow forecasting, understanding the movement of cash, what you start with in a period, your anticipated inflow of cash, what is going out, running this kind of projection on a monthly at least. Some businesses do it on a weekly, but generally a monthly. It lets you get an idea of how cash is moving in and out, where the shortfalls are, and again, allows you to make proactive decisions to make sure you have those reserves in house to be prepared for those quiet seasons or those low seasons. We're going to talk about applying the knowledge a little bit, because we've talked about the what and the why of financial statements, but if you don't get into the how of putting that knowledge together to work, you really walk away and you're not really sure of what to do with it. So it's important that when the true empowerment begins is applying the knowledge you've gained, not just about taking notes, it's about taking action. So we're going to talk a little bit about strategies, and we're going to talk about practical, actionable insights that you can really go in back to the office today and discuss. We're going to explore how to turn these into some concrete steps. And we'll discuss how you can enhance your process and possibly utilize some technology to help streamline some of these tests. Remember, knowledge is most powerful when it's applied. So when we go through this next section, maybe think about some specific areas in your business or some conversations you could be opening up based on what you get out of here. So hands down, one of the most common questions we get is, how do I improve our bottom line? We all want to make more money. And the true answer is there's only 3 ways we're going to do it. We're going to sell more. We're going to we're going to sell more. We're going to spend less. And selling more gives us 2 ways. One, best option, we sell more by raising prices. We are making more money for the same amount of investment. Second, you sell more. You sell more widgets. More volume comes with more cost, but that is the second way to improve our bottom line. Third, reduce expenses. It's about as simple as that. So we're going to focus on a little bit of actionable strategies that will back these up just a little bit. So let's explore these 5 areas. Increasing sales is the easiest and most straightforward way to improve cash flows. Marketing campaigns, expanding product lines, entering new markets, pricing strategies, sales incentives are all ways we can drive sales volume. One of the main places we would stop and look with you at first goes back to that break even, but it goes back to your contribution margin. What are you selling? What are you selling it for? What does it cost you in order to sell it? And what is your margin on that? Is that bringing enough money to the bottom line back to the house to support the house? And if your cost is too low between what it costs you to do it and what you're selling it for, that would be one of the first places we would be talking to you about your pricing strategy. Second, reducing expenses. Prudent financial management really means keeping a tight rein on expenses, reviewing expenditures regularly, renegotiating contracts with suppliers, every 3 years, requote your insurance, relook at other utility bills, streamline operations, get rid of redundancies, do anything you can to cut down on those unnecessary costs. Because when times are going well, we tend to get a little freer on bringing expenditures into our business that when times go wrong, we're very quick to slash. Prudent financial management is keeping an eye on that ongoing. There's always a little bit of fluff, but we bring something new in. Let's make sure we're keeping our finger on what's running through our books. Inventory management. How much inventory is tied up in capital sitting on a shelf, that is going stale. Sometimes it's actually going obsolete sitting in people's warehouses on their shelves. Adopting a more of a just-in-time, reducing your carrying costs, reducing and releasing cash tied up in excess stock is something to really evaluate. There was a time I worked for a company and we brought so much of our product in from overseas that we had a 12, 16 week, just a delivery cycle to get something overseas. So when you're doing a 6-month planning of bringing products in from Europe, you really are trying to evaluate what your market is going to, because you're trying to project today what you're going to need 6 months down the road. Managing receivables, managing payables. Manage receivables. Let's accelerate our cash inflows by, tightening our credit terms, improving our collection. Follow up your day sales outstanding. This should be a KPI you are measuring on a monthly basis. How long are people owing you money? Follow up. Managing payables. Maintain good supplier relationships, negotiate those payment terms, anything we can do to keep cash in the business longer, improving cash on hand, interest in the bank, anything like that is beneficial for our side. By implementing these strategies, you can help effectively manage your cash flow ratios, ensuring you have the liquidity in order to meet your obligations, as well as having liquidity to reinvest and opportunities for growth should they occur. So the financial health checklist is actually going to show us and help us measure the vital signs of our business's well-being. It's like going to a doctor for a checkup. We're going to our books to find out how we're holding things up. Debt to equity compares the liabilities to the equity of the business. This provides a clear picture of your company's financial leverage and risk profile. Lower ratio signifies a more financially stable company with less reliance on debt. This is a critical KPI to measure, and it is one any bank or lender is going to look at immediately as they evaluate any request for financing. Working capital management. Working capital is that fund, that burn rate that you need every month in order to run the business. And this involves overseeing the company's short-term assets and liabilities to ensure that operational efficiency, flow, and keeping the financial health. Operations today are paying today's expenses, and we are self-sustaining and supporting of our world. This includes managing our cash flows, inventory, receivables, and the payables once again. Budget to variance analysis. If we were in a real class, I'd be asking people to weigh in. How many people are completing a budget every year and actually evaluating their business performance against? If you want to drop that in the chat, I'd love to hear it. This is a very underutilized tool in business strategies. We all go into a year with ideas and thoughts and what we think we're going to achieve. And then life happens. No plan ever sustains. By creating that original budget and laying it in stone, what you hoped or thought or felt was going to happen, and then being able to evaluate how things are actually going, really allows you as a business owner, leader, manager, decision making, to understand how the business is derivative away from what you thought the plan was. So this allows you to see where you are over underperforming and allows opportunities for corrective actions or course corrections, or just the fact that the world that we thought we planned for has differed, but let's reassess and realign to where it's going. So it's really an underutilized tool that we fully advocate and support. Last section we're going to really go through is technology tools for financial management. The integration is not just a convenience any longer, it's a necessity. So leveraging tools can significantly enhance the way you manage your company's finance. They streamline processes, they reduce errors, they provide actionable insights. So stop, whatever your industry is, explore the available options, because if your accounting team is still spending their time hands on the keyboard every day doing a lot of work, we're probably leaving some efficiencies and automations behind. In fact, next month, turn in with us back here, because we'll be working with the SBDC on an Embracing Technology for Your Business Operations presentation. As we look at it, though, cloud accounting software, embrace the power of the cloud. This is where has really revolutionized financial management, allows real-time access to information, seamless tracking, updating, and collaboration across teams, no matter where you are. It's about having your team and your financials and your customers and everyone at your fingertips, ensuring just more efficiency and accessibility for your world. Financial dashboards, a little more my side, but these are really financial dashboards. They are your accounting software that's going to provide some visual representations of your financial health. Black and white figures on paper really does nothing for anyone, but some of these dashboards really show some great graphics and actionable information that a key glance at those key performance and financial indicators. There really can be a game changer for quickly assessing the company's performance and understanding your position to make informed decisions swiftly. Expense management. Tracking and managing expenses is one of the most tedious aspects of any business. With the right expense management app, you can really automate the entry, tracking, and categorization expenses, capturing your team's expense reports and importing them directly into your accounting software, streamlining payments out the door so you're not physically printing and signing checks. All of this saves not only time, but also improves the accuracy of your financial information, and the expense management really can provide some insight into your spending patterns. We really encourage all of business owners to adopt or explore tools, not just to simplify from the financial aspect, but to really harness data for your strategic advantage. Because to ensure your business stays ahead of the competitive market, you need to know not only where you stand, but where your market stands. So these tools can often help you see benchmarking in industry standards, how you are stacking up against the rest of the people in your industry. And with that, we thank you for joining us. We're sharing two takeaways. Not only are we sharing the presentation here, we have a booklet we are going to share of understanding your financial statements that provides a little information, just an at a glance for this. You've seen how understanding your statements is not just about number of on the paper. These are actual decisions and actual intelligence that you can use. So on that, what can we offer, and any questions?
Thank you, Sheri. That was great.
And here's the little ebook we're sharing if you go and check it out.
Yeah, I have read this, and this is a really, really great one. This is well done. It's got great stuff in there.
Okay.
Yeah.
So what can I do for you guys? Questions?
Yeah. So here's your chance to get some really targeted info for your business. So okay, Darlene says, how do you recommend seeking a CPA/finance support for a small business?
Okay, so finding one, I'm going to come from the side that we actually work on. We feel that your financial team includes both an accounting services provider as well as a tax group. Two sides, same coin. I liken it, you don't go to a podiatrist for a brain tumor. As an accounting service provider, our focus is working directly with the business owner on day-to-day operational actionable resources to grow the business. Our tax groups are developing our tax strategy. So they define the tax strategy. We help the business owner develop the operations. Finding that help is actually getting harder. There seems to be a shortage of accountants these days.
Mhm.
But it really comes down to finding your fit. What is your industry? Speak to a couple accountants, bookkeepers, tax groups. Not everyone is the right fit for everyone. Some tax groups only want to work with big firms. Some, love working with small businesses. Not sure if that answered the question, but talk to someone about your industry. Make sure they understand what you do. 80% of accounting is debits and credits applicable to all. The other 20% is specialized for your business, your world, your industry.
Yeah. I'm piggybacking on that question, Sheri. On one of the last slides, you were talking about using technology to categorize expenses, and so how would you interface all that with working with your clients? I mean, what do you recommend specifically? What would be the process that you would recommend specifically to a small business owner to make the transfer of information and back and forth communication very seamless?
Okay. With our clients, so if we're talking about automating, so just to give you an example, if you're working with QuickBooks Online now has a drag and drop OCR API within QBO. In your expense feature, you can drag your bills, receipts directly over, and the system is reading them, filling out the fields for your review to be imported directly in. So the days of having to key your transactions are more of a drag and drop OCR.
Okay.
We work with our
Hang on,
clients.
Sheri. So Darlene asked the question I was going to ask. So what was all those acronyms you just spouted out to us there?
QuickBooks Online, QBO.
There was more.
OCR is optical character recognition, and
Okay.
API is like an automated protocol interface.
Yeah.
So what that is think you get a bill and you drag it into QuickBooks Online, and instead of having to key the bill, vendor date, invoice number, pick my GL, key the description, amount, you drug it over, and the OCR, the optical character recognition, reads your document. And it's like, well, we filled in all these fields, and you do a spot check, and you're like, yes, you read it right, and you hit enter. And so instead of having to manually key it, it has taken that information and read it into the system for you.
Mm.
So it's a fast trick that we love. Dealing with clients and communication, we work with clients both through email. We use a lot of channels, but we utilize a client portal. Email is an insecure way to transmit information. And truthfully, every time when a client goes, hey, I changed my bank account and here it is, it's like, this is a very, very dangerous world we live in, folks. So don't do that. Client portals we use a client portal. So all our clients, think of it just as a shared Dropbox, a shared folder, but we can drop information in, they can pick it up, they drop information in, we pick it up, and we just have a private portal that we bring information through for clients.
Okay, great. Yeah, thanks for that.
Sorry, I spit all those acronyms off like everyone knows OCR.
Yeah.
I speak numbers.
Right. Um, so what so like when you do like your reviews with your clients and stuff, do you tell us a little bit about like what that process does? Do you do like do you prepare trend analysis for folks to work through, or what's that all like?
Okay, so we work with our clients in several ways, but all of them in the client accounting services arena. So, and we are really heavy on what we consider financial literacy, because I shouldn't be the person most knowledgeable about the financial position of your company. And that's just the truth. So we work with our clients. Some we meet with weekly, monthly, quarterly, depending on the business and what they're wanting. But a lot of it is just a conversation. So, we met with all our clients at year end, and we reviewed how the year went. This is how your year was. This is where you were up or down in comparative last year. This is where you're spending your money. In this industry, compared to last year, it looks like you're investing money into your advertising. What are your goals there? So we're talking to clients. What are you trying to do? So as we have future meetings, sometimes it's like, same that you have those one-on-ones with your team, we're having the one-on-one with our client. Are we holding steady? Are we holding the course? Are we still on target for what we're trying? Did we get shiny object syndrome and kind of wander afield, and we've just totally changed lanes since last month? And okay, are we changing lanes, or do we need to get back to where we were trying to be? But at the core of it, it's a relationship. It's working with our clients. They are experts at their world, and they don't want to be, or nor are they experts on accounting. They want this part handled. I know it needs to be done. It's good. It's great. We can talk about it. As a client told me recently, I asked what the best thing we'd given to him this past year was. And he's like, you gave me days, because instead of it taking me days to do my books every month, I meet with you for 2 hours and we're good. So the focus for him frees him up to do others.
Yeah, that's a great point. I noticed that a lot, is that people will say to me like, oh, I'm gonna get a QuickBooks subscription, do my own books, and save a bunch of money. And I say, you're gonna save some money, but you'll end up getting in trouble and cost you a heck of a lot more. And then there's that other thing about really, like you said, you need to work in your own pay grade. I mean, you're a business owner doing a certain thing, and every minute you're trying to figure out QuickBooks is a minute you're not making money because that's not your job. You're not a bookkeeper. So
Exactly. And I'm a CPA and someone else does my taxes. And I am a CPA because I don't specialize in taxes. I specialize in how tax law impacts my business clients and how we can best utilize that to best improve their bottom line and therefore their, wealth. How to, which form I put it on. That's the next guys. We make very pretty financials, and the next guy takes all the numbers he wants. And we like it that way because, again, it gives two-eye mentality. It's not
yeah.
just us and the business owner. We have the second set of eyes from the tax group. Yes, you guys, you're following the strategy we've laid out.
Yep. Kimberly says, thanks dearly for this information. I'm actually working, but wanted you to know that is there a way to listen to this webinar again so I can take detailed notes when I get home? And yeah, we'll send you this recording tomorrow. But yeah, she wanted to thank you for all this information. And Kimberly, I hope you hit up this QR code and got Sheri's ebook too, because it's really good. But maybe we can just send that along as well when we send the recording out.
Absolutely.
Yeah, we have a copy of that still on file, so we'll just forward that.
All right, excellent.
Thank you.
All right, I think that's all the questions we have. So Sheri, this has been great. This is spectacular as always. You do such a good job, and I really appreciate you taking time out of your day to come and share with everybody. I know everybody else, appreciates it. So does Kimberly. So
Well, tune in. We actually have an Instagram just for us, the firm, but we also have a financial literacy channel going this year. So RF and Lit. So follow on Instagram. It's just things you always wanted to know about is kind of the thing. What you didn't know you needed to know about commercial leases or small business loans.
That's fabulous.
Okay. Look forward to next month.
Yeah, Sheri, thank you so much. Janet, thanks for driving the ship as always. And we will see you guys next Tuesday on our Toolkit Tuesday. So join us at noon as always, and we'll see you then. Have a good Thursday. Bye, everybody.
Bye.